Awesome. All right. Well, again, guys, thanks for being here. Thanks for sticking through the technical difficulties we had getting started. I, along with Trading Pub, truly do appreciate that. Everything seems to be fixed now, so smooth sailing going forward. All right. Before I get started here, real quick, how many of you currently trade Forex or maybe looking to trade Forex? Just want to kind of get a feel for the group. Yes, yes. All right. So I would imagine then maybe the other the rest of you guys are maybe more focused on equities, and my focus here today is going to be on Forex, obviously, given the title. But the nice thing about the Pristine method is that it does apply to whatever it is you're going to trade. So just keep that in the back of your mind. But my focus really is going to be more on Forex as it relates to the presentation. All right, so let's get started here. First, Pristine is recognized as an educational leader, right? We've been reviewed, our courses have been reviewed by Stocks and Commodities. We've been seen on Trader Planet site. We've received many accolades from them. Obviously, we have a relationship with Trading Pub, which we are very proud of. Ben Zinga, as well as being the preferred educational company of Lightspeed, which is one of the biggest brokerages out there. So Pristine, is no small fry in the industry. We've been around for really over 20 years here now, so we know what we're talking about. The method hasn't changed, and that's because it's based on fear and greed, human emotion. It's not an indicator. It's not some kind of trend line that takes advantage of what's working right now. And that's the thing that I find, and I'll get into it more. But the thing I find with indicators and tools that are out there to everyone is that at the end of the day, if the market environment begins to change, if the volatility begins to change, that indicator begins to lose its value. Right? Now I have to start searching for the new settings that are going to be beneficial to my trading as it relates to the quote unquote new environment. So, like I said, I'll get more into it here as we go on. But before we go any further, just a quick disclaimer, guys, it is possible to lose money trading. If you don't know that at this point, I've got to assume that you haven't yet traded, and this is a lesson you will learn. But trading is like any other business endeavor that you're going to look to embark on. Right? Any other business, whether it be owning your own restaurant, whatever it might be, there are going to be losses along the way. It is a cost of doing business. And that's what we need to look at trades as a cost of doing business. But the bigger risk really is not trading as a whole, but not having the right education. Not having the right education is the bigger risk in trading. And I'm not saying that Pristine is necessarily the right education for you. You need to find out what's right for you and then dive headfirst into it. Don't look back. Because if you go on an endless search for the holy grail or the perfect system, it's not out there. Right? So with that being said, let's start talking about some of the things required, not just to be a successful Forex trader, but also a successful trader in general. And it all starts with psychology. So a little audience participation here, guys, will make this overall experience that much more enjoyable, not just for you, but also for me. Do you have a trading plan? Yes or no? Audience, and guys, I'm not gonna bash anybody. I'm not gonna get on anybody for saying yes or saying no. I'm just looking for feedback here. Do you have a trading plan? Right, getting some yeses, some nos, pretty much what I expect. I mean, okay, try. Hey, you know what? That's the first step in getting to where you need to be. And as Vicky is saying, yes, but needs revisions, and that's also an excellent point to make. Is that just because you have a trading plan doesn't mean that it can't be adjusted. It's A trading plan is a document that should be always evolving based on the information that you are recording based on your success or lack thereof, right? You have to constantly be learning, right? And when I say trading plan, I don't just mean a trading plan that you have in your head. I mean a trading plan that is on paper that you could literally hand to me and I could trade it successfully. I mean that's the type of trading plan you want to be able to develop. So what should something like that include? Well, there's plenty of different things, such as what tactics are you going to trade? You know, what are your goals? As you'll see here, I've got weekly, monthly, and yearly goals. One of the biggest mistakes that I find is that traders will say, you know what, I want to make 6 figures this year trading. And, you know, that's great. Good for you. I don't, you know, there's no reason that you can't necessarily achieve that goal. But how are you going to get there? You can't just say, well, at the end of this year, I'm going to make 6 figures and have no way of measuring that. At the end of every week, at the end of every month, are you on pace? If you're not on pace for that goal, how are you going to adjust your plan to help you achieve that? So there are plenty of things that need to be considered. And you might be noticing here that I don't have a daily goal on here. Let me ask you guys, do any of you have a daily goal for yourself as far as what you may want to achieve per day? I would say that we absolutely need to have a max loss per day. That is a necessity. But as far as a goal per day, do you have one for yourself? If not, right, you know, you have to consider whether that should be in your plan or not. But you used to have a minimum. Okay, that's fine. So in my opinion, daily goals, and again, for whatever this is worth, my opinion is that daily goals are a negative thing, and I'll tell you why. Right, let me paint a picture for you. I'm sitting at my trading desk. It's 3 o'clock or whatever the time may be. The end of the day is getting close, or at least when I'm going to stop trading. Right? Maybe I have to go to another job, maybe it's getting late, whatever the case might be. Do, you know, and your goal is $500, whatever the number is. Let's say it's 1,000, okay? Your goal is 1,000, you're up $750 right now. It's getting close to the end of the day. What are you likely going to do? And you know, I don't mean you specifically, but what are traders in general likely going to do? You're going to start, yeah, you're going to start forcing trades, take unwanted risk. Exactly. So, and that as a result is likely to have a negative impact on your P&L. So instead of being up $750, you're maybe up 500, or even worse, break even. Even worse than that, you're down money. That's why I don't like having a daily goal, is because it might force you into doing things that are not natural in a sense, right? That aren't part of your plan. It's going to cause you to force trades. So personally for me, I don't like daily goals. I prefer more weekly, monthly, yearly type goals. Right? What else should be in a plan? Well, what tactics are you going to trade? We teach you plenty of tactics in our Pristine method course. Right? How are you going to manage those trades? Do you consider different market conditions? I mean, honestly, if you use a pivot, price pivot style of management, that will work very well in a trending environment. But what if you find a stock or a Forex pair, whatever it might be, that's not trending one way or another, that's instead going sideways? If you enter a trade that's going sideways and you're going to try and use pivots to manage that position, you're not going to see the success that you want. You're not going to see the success that you would have if that environment was trending. So you need to have different types of management for different environments so that you can really be successful. You know, I find traders making this mistake quite often, is that they will have the wrong type of management style for a certain environment, and then they say, you know what, this style of management doesn't work. I have to start looking for a new way of managing my positions. When in reality, that management style shouldn't work for the environment that you're trading in, because it's just it's not right. It's not a fit. Does that make sense? Does that make sense to you guys? So you have to consider different environments and use different management styles based on those environments. And what are your daily habits? Are you staying hydrated? Are you taking periodic breaks throughout the day? Are you tracking your trading stats, your batting average and Sharpe ratio? These are all important aspects, not only to consider as far as psychologically speaking, but also to include in your trading plan. Discipline is another huge factor when it comes to trading. And again, this is not just for Forex, this is for equities as well, but you have to stay disciplined. Are you following your plan? If not, what are you doing to adjust your plan? Maybe you take a setup that's outside of your plan and it works well. Should you implement that style or that tactic into your plan? Maybe, maybe not. You'd have to review it over a period of time, back test it. You should have different folders, red, green, and blue. And in the red folder, you're losing trades. In the green folder, you're winning trades. In the blue folder, put any trades that you saw which you did not take. And this way you can begin learning about yourself. Because let me tell you something. Your future success is locked inside of your current losses. Your future success is locked inside your current losses. If you can correct the mistakes that you're making now, it opens the door to a whole new world of profits for you. And I'm going to tell you right now, I guarantee that you are making the same mistakes day in and day out. And if you can get to the bottom of it, if you can correct it, you will start to be more profitable. So you have to question, what am I doing to improve from my mistakes? How am I learning? And are you following your rules? These are all things that you have to be taking into consideration to be successful, because having the right psychology, having the right discipline is going to result in a very confident trader. And a confident trader is one who will make money. If you don't have patience and discipline, I'm going to tell you right now, very honest, it will be difficult for you to make money. You have to be patient, you have to be disciplined, because that breeds confidence. And confident traders make money. A word on indicators. There are a number of them out there: MACD, trendline, RSI, fib retracement, stochastics, you name them. Indicators do not work. They say that 70 to 80% of traders fail. Would you guys agree with that? Would you, it's a very well-known statistic. In fact, it may be even more. But would you guys agree that 70 to 80% of traders fail? More. Absolutely. Would you also agree that the majority of them are using indicators in some capacity? Steve, you're already a step ahead of me, right? As Steve said, they all follow the indicators. Well, let me tell you a little secret, right? If indicators worked, well, you know what? Everybody is open and able to have their own opinion, and you know what? I'm not here to bash anything. I'm just, you know what? I'm just talking about what I've seen, what I've experienced, and I can show you any chart. You can put any indicator you want on a chart. Well, again, Brian, I have no experience with the indicators you just learned about, so I'm not gonna speak to that, but I can tell you that no matter what indicator you are to put on a chart, I can show you a pattern in price. In other words, you don't need any indicators. All you need is an understanding of price in order to be successful. And indicators really are more of just a crutch than anything else. They're just a crutch. That's all they are. They're a reason for traders to feel comfortable with taking a position. And also, I mean, the majority out there are teaching the need for indicators, so they almost feel like if everybody out there is teaching it, I have to use it, right? Well, no. Again, so let me tell you this little secret. As we all agreed, 70 to 80% of traders or more fail. We also agreed that the majority of traders are using indicators. If indicators worked, 70 to 80% of traders would not be failing, right? I mean, it's pretty straightforward. It's pretty kind of obvious when said that way. At least for me, it was. If indicators worked, 70 to 80% of traders would not be failing. Part of the reason indicators do not work is because they're based on price and volatility. If the volatility changes, whatever indicator you're using right now is going to have to be updated to factor in that volatility. And that can take some time to get the right settings to tweak it the way that you want to see. All right. Well, money management and psychology has nothing to do with indicators. I mean, maybe, maybe not. I didn't get to listen to the entire presentation from the last guy that was speaking. I don't know if they got into managing the position or if it was just, here's where you would have gotten in. So, sometimes indicators, maybe they are used as exit strategies. I know some that are. It really depends on you as a trader and what works for you. But all indicators are based on price, right? So moving along here, I'm going to talk to you more about Forex, as I said. For anyone that is new to Forex or kind of getting used to Forex, basically what you're doing is trading one currency against another. So as an example, we've got Euro US dollar. You're basically trading the euro against the US dollar. The euro is your base currency, the dollar is your counter currency. Not spending a whole lot of time here. I'm going to assume that you know this stuff. If not, you can email me offline. We can talk more. Why trade Forex? And I agree, Steve. Sometimes keeping it simple is best. Why trade Forex? Well, it's a 24-hour market, and this to me is the real appeal. You can trade it whenever you want. And yes, Steve, they are excellent trending markets. I will show you some charts to confirm exactly that. Yeah, 24, not 24/7, but 24 and 5.5. But yeah, and you can see the overlap of the different markets. You got the London session, New York session, the Australian session, and Tokyo. So the fact that they overlap means that there's always something to trade. No matter what time of day it is, no matter what's going on, there's an opportunity to be had. And this, as I said, is what I like about Forex. It is very accommodating to those who have other jobs or whatever the reasons may be. I mean, whatever your reason, maybe you can't be trading equities all day. You have another job. This allows for a customized schedule. You have more seamless price action. There are no gaps. I mean, sometimes you can see gaps with high impact news events, but for the most part, there's no gaps. The price action is seamless, and you've got enough liquidity on the major pairs to get in and out at any time. In addition, to being a 24-hour market, there's also typically lower costs associated with trading Forex. There are no commissions, as that is built into the spreads, along with trading platform fees, data fees, exchange fees, right? You don't have these costs of doing business when it comes to Forex. So some very significant advantages to our bottom line in that regard. And you get more predictable fills. Instant execution of market orders, no short selling rules or restrictions. You know, if you have a pair that's just getting absolutely beat up, there's no rule to say that you can't continue to short that. There's no rule to say that you can't participate in the pummeling of a pair. Right? You want to short it? Go right ahead. So let me show you some examples of Pristine concepts. After this, I'm going to show you my favorite pattern, my favorite strategy, and then I'll show you some live charts. Okay? And if you guys have any questions at any time, you just let me know. But as you'll see throughout these charts, I don't have any indicators. They're not necessary. So here you've got US dollar, Canadian dollar. And this, you know, this is a fairly recent chart. I mean, it's a daily chart, but you know, it's pretty current for what's been going on here. The trend, right? This move down here, first of all, right? One of the things we have to understand is trend analysis. This move down changes the trend. The next retracement is a shortable opportunity. There's absolutely no reason not to be taking advantage of this move. It's into resistance. It's got many of the amplifiers that we look for and talk about in our course. You get a nice multi-day move lower, little pause here, but this was very insignificant. Price continues to fall. We go sideways. Things are chopping around here, but it's still within a downtrend. Tries to move up, fails. We come all the way back down to the bottom of the range. You know, guys, this is something that seems very kind of benign, very innocent, but it's very powerful in the message that it's telling us. So think about this here with me for a moment. This candle, right here to the left of that little green candle, to the left of that little green candle, what was that prior to completion? In other words, what did that candle look like when it was trading up at the high of that bar? And the blue line is a 20-period moving average, Lori. Right? What did this look like when it was trading up at the high of that candle? It was green, right? It looked green. It was a bullish candle. Yeah, exactly, Harry. It was a bullish candle. By the time it finished, it was a topping tail closing down near its low. That's an indication that the bears, the sellers, are stepping up. It tries to move up the next day. It does, right? It does have a little bit of follow through. Notice this arrow that I have. It took out the prior bar's high, came right back in, closed on its low. The attempt to move up failed. And honestly, why shouldn't it fail? It's in a downtrend. It should fail. And it happened at this moving average. You have to be getting ready to short this. If you're not, you're going to miss the opportunity. That opportunity being a over $1,600 move lower on one standard lot. And that's in the matter of what? 1, 2, 3, 4, 5, 6, 7, maybe 2 weeks, a little more. I don't think anybody in this room would not take a $1,600 profit in 2 weeks' time. Here you've got, again, US dollar, Canadian dollar, weekly and 15-minute chart. Doesn't matter what the time frames are. That's another one of the beautiful things about the Pristine method. It doesn't matter what time frame. This applies to whatever time frame you're looking at. I'm not going to tell you you have to use this on a certain time frame. I will tell you that, you know, Forex in general does not lend itself to friendly behavior when you get to smaller time frames. In other words, you know, if you're using small time frames, 2-minute, 5-minute, you can get chopped up real easily. You'll see some much better, much cleaner moves on larger time frames. But be that as it may, the Pristine method works on whatever time frame you want to be looking at. So here, you know, again, US dollar, Canadian dollar, weekly chart pulling back at support. Buyers are going to step up. How do you use this information? I'm not suggesting you necessarily take it from the weekly time frame, because at this point it's weak. But why not go down and identify on a smaller time frame an uptrend where you can then take advantage of strength? Here, as an example, you have a over 100 pip move on an 11 pip stop. That's over $1,000 on just over $100 risk. Right? That's 10 R's, 10 to 1 in terms of reward to risk. Pound US dollar. Here is, you know, almost a $5,000 move on $1,000 risk. This is what I'm going to talk to you about. This is one of my favorite patterns, if not my favorite pattern that I look to take advantage of all the time. This is what we refer to as a pristine buy setup. I'll talk to you a little bit more about that coming up. But again, here you have about a $5,000 move on $1,000 risk. Let's just say you're risking $100. You know, let's say you're starting off small, risking $100. That's $500. And again, 1, 2, 3, 4. So what? You know, a little over 2 weeks. Was it painful to sit through this, guys? Would this have been a painful move to sit through? Yes or no? What do you say? Would this have been a painful move to have to manage through? No. This is a daily chart. Very clean movement. Not painful at all. Yeah, exactly, Steve. Only painful if you missed it and you ended up having to watch. Absolutely. Euro yen, daily chart. Here it is coming down to support, which has proven to be a significant area because it has held multiple times in the past. So why should this time be any different? Why should this not hold this time around? It shouldn't. It shouldn't be any different. It should hold. So identifying an area of support, you drop down to some smaller time frames. You got a 60-minute here on the top, a 15-minute on the bottom. You get a nice little retest pattern, double bottom, strong move up, little pullback, you buy it here, right? Or buy the breakout on the 15-minute chart if you're looking for a nice quick move. Maybe you're not looking to hold for multiple days. Maybe you want to be in and out within the same day. Well, here it is. Whatever your needs are, the Pristine method has the answer. Here's another example. This is a trade that I took, beginning of the month, and this is on a 4-hour chart. Pound US dollar, little double bottom down here, stabilization. You buy it over these highs. You got some room to move up. Quick little scalp up into this area of resistance. Right? Easy. So let me show you my favorite pattern. Let me show you my favorite pattern. The Pristine buy setup. And it's made up of really only one key piece of criteria. And it's the key to capturing, as it says here, robust 3 to 5 bar gains or more, as you saw. Right? That trade I showed you on the pound US dollar, that was a Pristine buy setup, which gave 2 weeks of profit. So it's not just 3 to 5 bars. It can be more. That's why we let the trade tell us what to do, right? One of the things that I personally am not a big fan of is being married to targets. What do I mean by that? Well, if you have a strong move up, right? If you take a long entry and you're approaching your target, let me ask you guys, if you have a trade, right? You have a trade, it's approaching target. Let's say it hits your target. Do you completely exit the trade, right? Do you get out of the trade at that point? Yes or no? Take some off sometimes. Okay, makes sense. No, good, because how many times do you end up seeing that trade? And for those of you who are saying no, you don't, or that you take half, I've got to believe that the reason for it is because you've seen time and time again trades will exceed targets. Trades will exceed targets. So yeah, exactly. You put a trail stop on it. I don't want myself. I don't want to take myself out of the trade. I want the trade to take me out. I don't want to take myself out of the trade. I want to let the trade take me out of it. And I encourage you, I challenge you all, at least those of you who aren't yet doing this, I challenge you to do the same. And if you don't trust me, don't take my word for it yet. Go back and look at your trades. Say, if I held on through target, would I have made more money? If red bars are intermixed with green bars during the pullback. I'm not quite following your question, Shahid. If you can rephrase it, I'd be more than happy to answer it. I think though, if I can kind of guess at what you're asking, is if this pullback is intertwined with red and green bars, is it still okay to take? The answer to that question is yes, it is okay. It's not as clean, it's not as ideal, but it is still okay to take that. It just may mean that instead of getting, an immediate explosion to the upside, immediate follow through, you may have to sit through a little bit of chopping around it, so you just have to understand how the trade is more likely to behave at that point in time. But yes, you can take it. Right? And this pristine buy setup is scored or given 20 points in our scoring system. Right? So that's one of the things that we provide to you is a scoring system to rate the setups. In other words, wouldn't you find it of value to be able to say, hey, here's a 20-point setup, or here's a 60-point setup, right? Wouldn't you want to know the difference between a 60-point setup and say a 90-point setup? I can't imagine you would say no. So right there, the value in having this point system is obvious. Higher probability dictates retracements. Sure. Yeah, I mean, based on supply and demand, pulling back to support areas, where's the next reference point? Absolutely. So, let me show you some of these setups, right? Here you get several different pristine buy setups, right? You've got a PBS over here. You've got another one right here. You've got a little bit of a sloppier one over here. PBS right here. So again, I mean, and this is throughout an entire trend. This is a 20 and 40 period moving average. I'm going to show you something when I bring up the live charts. I've actually started to adjust the moving averages that I look at, but again, beautiful trend. When you have a trend in place, this is how you want to be managing it through using pivots, at least on part of the position. But you can see how high odds this play is. And, just another quick word on targets. I don't set targets at a prior high. If I'm getting long a pair that's in an uptrend, I am not setting a target at the prior high. Why? Well, you guys tell me, what is the definition of an uptrend? How is an uptrend defined? You guys tell me. Not a trick question. Everybody should know the answer here. Yeah, exactly. Higher highs and higher lows. So why does it make sense for me to set a target at a prior high when I'm taking a trade that's in an uptrend, right? And by definition, an uptrend is a series of higher highs and higher lows. So while, yes, of course we may get a stall at a prior high, but why am I going to look to take target there? Even if it's partial target, right? I'll use a bar by bar trail, right? I'll use a bar by bar trail, and if the trade takes me out, okay, fine. But look at this. Look at this example here. So if I just, draw a line here. Here's the prior high where I would have gotten out, right? You see this line I just drew. Here's the prior high where I would have exited part of my trade if I just said, okay, I'm going to offer some out up there. Look how much more I would have made if I kept it to a bar by bar trail. Look at the additional profits that I could have received. Right? Same thing over here. Same thing over here. Here it would have been a little, you would have got clipped a little bit there, but then it kept going. Right? So it doesn't always work. But you see what I'm saying. You get the point. Using a prior high as your target can actually cost you money. Here's another example. These setups happen all the time. It would be under each bar's low, so it would be bar by bar. In other words, if we're looking at this example right here, this second circle, after 2 bars in my favor, I'm going to start trailing bar by bar. So in other words, once the bar is complete, I bring my stop up. So if all I saw, right, let me just cover this up here for a moment for purposes of explanation. If all I saw was this, once this bar completes, I bring my stop up under that candle. Now, as the next bar is forming, I'm waiting, I'm seeing what's going to happen. If we trade under that bar's low, I get out part of it. Then, as this bar finishes, I bring my stop up. I do the same thing. If we get stopped out, we take half the position off, right? So now, instead of taking profit at this prior high, I'm all the way up here. And then, as you can see, we get taken out a little bit. Now we're managing the back portion of the position, and it continues to move higher. Yeah, these are moving averages, 20 and 40 period moving averages. Correct. Yeah, simple. Now, again, it really doesn't matter because I'm going to show you some charts with exponential moving averages on them too, and it really doesn't matter. You just have to find what works for you. Right? Here you have a very strong move up off of what was a downtrend because we've got this, we've got the shorter term moving average below the longer term, so we know that prices were moving lower. Here's your strong move up. You get a crossover of these two moving averages. PBS, you can buy it here. This one doesn't work. Not every trade is going to work out. That's the reality of trading. That's why we have stops in place. Price then pulls back into this very special area that we have given the name of the pristine buy zone. And this one worked beautifully. You can see a very nice move up. We get back in gear, price pulls back. Here's another PBS, off it goes. So, I mean, this setup, guys, this setup alone, you can use to trade successfully tomorrow. If you find this setup, you can start using it to trade successfully with tomorrow. The pristine buy zone, right? We go into it in much more detail in our course, but it's the special area between the 20 and the 40 period moving average. So, guys, before we start pulling up some live charts, and I'll show you some examples of what's gone on here. I mean, all these charts that I've been showing you are from recent, but I'll show you some other examples here. We still have 30 minutes or so to go, so plenty of time to go through all the information here. Forex done the pristine way, in my opinion, the right way. Multiple time frame analysis, trends, support and resistance, understanding and use of subjective analysis. So yes, we will use some indicators, but we use them in a way that makes them objective. Right? I'm not going to tell you to just blindly use Fibonacci retracements. Right? I do look at them, but I look at them in an objective way. In other words, do they line up with something objective? Do they line up with support or resistance? Because it all comes back down to price and the patterns that price is displaying, along with intermarket analysis, understanding how different correlations impact certain pairs. So this is the recipe for success. You have to be able to do all of this analysis if you want to be a successful trader, not just in Forex, but in anything in general. Because like I said before, this works with equities, with Forex, with futures, whatever you want to trade. And that's the beautiful thing about this method, is that once you learn it, once you understand it, you don't have to really learn anything else. A pattern is a pattern. You know, not for nothing, I could show you trades on stocks that, again, are the pristine buy setup. I can show you the pristine buy setup every single day on equities as well, and it works just the same. And the reason it works just the same is because human emotion doesn't change. And as I said to you before, indicators, while they may work for a very short period of time, they're not something that's going to work over the long haul. The pristine method will. It does. We've been here for 20 years. The reason that the pristine method works is because volatility, whether volatility changes or not, human emotion is always the same. Fear and greed may be increasing or decreasing at certain times, but you're trading humans. You're trading the emotions of traders as they are represented through price patterns. That cannot be manipulated. So, you know, guys, if you want more information on what I'm talking about, all you got to do is contact your Pristine counselor. You'll be assigned to one. They'll be your liaison, if you will, to give you free information, free content. If you need it, someone to talk to, you know, they're traders themselves, so they can relate to you very well and put you down the right path that would be appropriate for you. Okay, so give me a second here. I am going to take down these charts so I can go live with you. Just give me a moment. Get this set up the way I need it. And if you guys have any questions, again, just let me know. Okay. So guys, how are you enjoying this presentation so far? You getting some good nuggets? 2 out of 10? What happened to my charts here? Hold on one second. All right, there we go. Should see the charts now. Can you guys see the charts? I've not, Zoltan, done any analysis with Renko charts, so I can't speak to that. But you know, if you can chart it, you can trade it. So absolutely, right? If you can chart it, you can trade it. So here are some examples, and I can change these charts here to whatever you guys want. We've got on the left side, and these are all daily charts, by the way. The charts are small. You can make them larger on your end, Brett. If you there should be 3 buttons on top of the app sharing there, and you can change the size so that you can see them a little better. But these are all daily charts. These are all daily charts, and what I have here is an 8-period exponential moving average and a 21-period exponential moving average. So the blue, right, the blue one is the 8 exponential, and the red is the 21. So one of the things, you know, the way in which I use this is really more of a guide than it is anything else. But when you get these crossovers, when you get the crossover taking place, that is a lot of times a cue or a clue that a trade is imminent. So again, like I said, it's more of just a heads up, if anything, and then you can still apply what we've talked about before to the analysis. So here, New Zealand dollar, US dollar, right? It was in an uptrend, right? And I can scroll this back a little bit here. You can see it was uptrending. Notice this little crossover here. Price moves higher. Right? Price moves higher there, and offers up some very nice profits to the upside. It runs into this resistance. It begins to stall. Price then goes sideways a little bit, and then ultimately does move higher again. Then it rolls over. You get this, what we refer to as a wide range bar down. This begins to change the mood of traders. It begins to change the direction. Then we get this bearish pattern here after the crossover. So again, after this crossover, we see this bearish pattern setting up. This is what we refer to as a pristine sell setup. And if you took this short here, price continues to fall. Notice how it's respecting this 8-period exponential moving average. It then pushes up above it a little bit. But is that really a reason to exit the trade? Not necessarily. Not if you're managing for a longer term move. Why? Because you have to look at resistance, right? So to just move above a moving average is not reason enough to exit a trade. Because all this does is moves up into resistance where sellers begin to come back in, and it drives it back to the downside. And here we are now, right? Still staying weak. This is still weak. And if I change this to a weekly chart, right? If I change this to a weekly chart, I mean, it is coming down into an area of support, but look, we just got that crossover here that took place. We have this very bearish candle moving lower. There's really no reason to think that this cannot potentially continue to decline. The fact that we're into this support area, though, does suggest that we may start to see a little more indecision. Right? So this at this point right now might not be the best opportunity out there. Here you've got US dollar, Canadian dollar. And again, very strong move off of this low. We were downtrending over here. Strong move off the low. Price begins to consolidate. Notice the little crossover that took place within this consolidation. You're getting these bottoming tails. Again, you know, you have to think about the psychology of these candles. What was this candle here prior to finishing? What was this candle here prior to finishing? These were both very bearish candles pointed lower, but they didn't follow through. This tells us demand is strong. So you buy it over these highs, you buy the breakout, and off it goes. Off it goes. It breaks under the 8 the 8 exponential moving average, comes back down, stabilizes, bottoming tail, pristine buy setup, right? We looked at this pattern earlier. PBS, now it's back off to the highs here and trying to make a move higher. Aussie dollar, New Zealand dollar. Again, I mean, strong move up off these lows. Now, again, you could have traded it over here. I mean, this goes back to June. You can see how well it works. You know, you see how well it's trending down, right? These that I'm showing you, these are exponential. Right? It's an 8 exponential and 21 exponential. Thanks, John. So you get a strong move up off the low. You get the little crossover here. Price begins to move higher. You can buy this little breakout or buy these pullbacks. Price pulls back, buy setup, moves up, retests the prior high. No follow through to this bearish candle, indicates strong demand. It's holding the 21 period exponential moving average. Boom. Off it goes. And we can look at others. Let's look at I'm changing the middle chart here to pound yen. And look at what's happening here. First of all, let's double check the weekly just to see what it looks like. The weekly chart here, very strong uptrend. It's been consolidating. It's down on support. Odds would suggest it's going to try and move higher. Right? So we go to our daily. We see the stabilization down here. We see that this is getting close to a point where it would be crossing over. So this actually could develop into a long over the next couple of days here. Nope, same moving averages, Dave. Trying to keep it simple here. We don't want to try and have to worry about all these different kinds of numbers for the different pairs. So we're going to keep with the 8 and 21. And so again, here you have what looks to be potentially a crossover taking place. We'll have to see what happens here, but this may develop over the next couple days into a very compelling long position. So that'll be something to watch. We can look at really, I mean, if you guys want to look at anyone in particular, just let me know. I'm just pulling up, some of the primary ones that I look at. Here we've got the franc and yen, and again, here's your crossover over here, little PBS pullback, nice move up, and here it is potentially setting up again. So this is another one that we can be watching over the coming days for a potential long opportunity. You want to look at CAD franc? Let's do that. Oops, and here it is on the left. Here it is on the left chart, the far left. And this one isn't so compelling. It's got this resistance overhead here. It's not the cleanest. So, I look at something like this, and while you do have the crossover taking place, it just isn't all that clean. I look at the weekly chart, and that's honestly more interesting. The weekly chart, I do like how that's looking. So this really is something I would keep an eye on. And hopefully it can clean up in a way that I find a pattern on the daily, which is more compelling. But right now, I don't like, if I was to enter it here, the risk reward up to at least this area isn't really favorable for me. But I do like the weekly, and for that reason, it is something I will continue to monitor. As far as the pound Canadian dollar, we can take a look at that as well. And this one's getting ready for a breakdown, right? Obviously, you got the weekly, which is looking to roll over. I like this one a lot. I like this one a lot. And if it breaks under these lows here, it's got plenty of room to drop. You've had that rollover take place already. And notice what's happening here today, because this is not an insignificant day as to what's going on. You've got this very explosive candle that took place yesterday. Today we are completely negating that bar. Now, is it really a surprise No, it shouldn't be, at least. It really shouldn't be a surprise. Why? Because this move up was right into resistance. Let me show you a 4-hour chart. Right? Becomes a little easier to see. This is a 4-hour chart. Do you see now the move up into resistance if you didn't see it before? This was an obvious area to be looking to short. This was an obvious area to be looking to short. So price is now down to the bottom of this range. Probably going to get a little pause. I wouldn't be shocked if tomorrow was somewhat quiet, but I do like it on a breakdown under these lows here. Right? Under these lows, I like that. Yeah, I mean, it's at support, but again, look at the weekly. Right? It's at support, but this is an area that's been holding, and if it breaks this level, what's going to stop it? Right? If it breaks support, we're going to begin a new downtrend. Right? So, and where would this drop down to? What is the potential downside here? Well, I mean, what down in this area around 0.7245 before it really comes into any area where it may try and hold. But at that point, it'd be in a downtrend, and support is really just a reference point where price will stall, not necessarily where it will stop and move back up in a significant way. So I really do like this a lot, actually. And if you look at these moving averages, right, it looks like they're getting ready to cross over there on the weekly as well. Right? Whereas before, they've just been holding, you know, ever so tightly together, but they've been holding. Yeah, Forex is absolutely affected by global news. So one of the resources that you can use to get any kind of impending news is forexfactory.com. There you go, forexfactory.com. And you can get high impact, medium impact, low impact news, things of that nature. And you can even read a bit more about the news. But yes, absolutely, Forex is certainly impacted by news. Right? So again, this is this is looking good. In fact, you know what? I'm going to set up a trade here to look to take this as a short position. All right. So, all right. Let's see what else we've got here. You know, euro dollar. Obviously, this has been real weak on the weekly chart. Let me see Raleigh's question here. I note that you're using candlestick charts. Do you use any Japanese candlestick formations? Absolutely, yeah. That Raleigh is really the foundation for the method. You know, with that pristine buy setup that I was talking about earlier, it's made up of a 3 to 5 bar pullback within an uptrend where we would then be looking to take an entry based on certain criteria that has presented itself time and time again. So absolutely, we use the candlesticks for entries, for exits, for management. I mean, that's basically where we live as a pristine train trader. So again, the Euro USD here, weekly chart down into support, probably going to try and start stabilizing a bit, which it's already really, trying to do, but I wouldn't be shocked to see this try and hold a little bit more. This, Marcia, is MT4. This is the MT4 platform. Are you going to drop down in time frames? I mean, I could, Brett. I could if you want me to, but again, I would not suggest going down to 5-minute charts. Things tend to be choppier as the lower you get with Forex. So I would suggest staying away from it because from my experience and from what I've heard of other traders, those lower time frames are just they're not friendly. They're not where you want to be. You'll get chopped up. I think I missed a question here. What about pound Swiss franc? Let's take a look at that. This is the daily chart of the pound and the franc. And, you know, I mean, right now, you don't have that crossover taking place. Right? You don't have that crossover taking place. So really, this is not something I'd be interested in. It's trying to stabilize, but at this point, it's not there. Right? There's nothing there for me. It's in a downtrend here on the daily and just kind of stuck within this area. So I would stay away from that for right now. Pound the Swiss. Let's see. Do you have an average holding time? No, not. I mean, I don't go into a trade with an expectation that I'm going to be in it for X number of days. Whatever the trade's willing to give me is what I'm going to take from it. So no, there's no average number. For the most part, Brian, but I mean, again, I will look at 60-minute charts, 4-hour charts. I mean, again, I showed you some examples in the PowerPoint where we had some trades off of a 15-minute chart. We were looking at the 4-hour chart. What was that one we were just looking at here? You know, I mean, we can drop this down to an hourly, you know, and I mean, you could have played this little pullback into support, you know. So yeah, you can definitely kind of scalp the intraday swings if you wanted to. You can absolutely use the Pristine method in that way as well. But I do find that the cleaner moves, the more sustainable moves, will be seen on the daily. Right? That's where you're really going to get those nice moves. Right? Look at USD Swiss franc. I mean, look at this. Nice push up. Right? Pulls back a little bit, stabilizes. Here, and again, guys, I mean, we can look at example after example. Here was a move lower. This bottoming tail looked like a big nasty red candle at one point. Being that it was a nasty red candle down, told us that at some point during this day, traders were very bearish. Traders were they were getting short, looking for this to continue moving lower. By the time it finished, you've got this bottoming tail. It gets over this bar's high, and off it goes. Boom. You can buy that right there. You get your crossover. Price goes sideways into the rising 8 exponential period moving average. You buy it off of that on the breakout. And again, I mean, it's just very nice fluid movement higher. Do the same setups apply to commodity? Yeah, absolutely. Again, like I said, the Pristine method, these patterns, if you can chart it, you can trade it. It doesn't matter, right? If you're an equities trader and you want to get into our trading room to see it done in there, you know, all you got to do is contact our counselor. They can get you set up, you know. It's not a problem. And we'll let you in there for free. I know the other guys were charging, but you know, you want to get in there a couple days, no charge, not a problem. I mean, there's nothing to hide. Yeah, exactly. The sellers are in deep trouble over here. And that, Dave, is part of the power of this type of setup, is that it catches traders on the wrong side. Anytime that you can get traders shocked, there's money to be made. Anytime you can shock someone's expectations, there's money to be made. Plain and simple. I'm just looking to see if there's anything else out there that we can take a look at here. We can take a look at New Zealand dollar, US dollar. That's had a very nice trend lower. We actually already looked at this one, but again, just to reinforce the concept. Breaks down from this trend, crossover, shorted here. Nice move. Guys, look at this. If you were on a bar by bar trail, if you were on a bar by bar trail and you had shorted this move down, you wait 2 days after your entry before you start managing bar by bar, you don't get out until over here. So you're in this for 1, 2, 3, 4, 5, 6, 7, like 8 days before you get taken out of any of it. What size do you need? Well, I mean, it's up to you. It's whatever you can afford, really, as far as the size goes. But one of the solutions that we have is our prop program. We have a Forex prop trading program where you can get 100-to-1 leverage, 400-to-1 leverage at some of the higher levels. So if that's something that you're interested in, you don't have to tie up your capital necessarily. You can just reach out to a counselor. Yeah, usually it's based on the daily candle. If I can go down, Brian, to a smaller time frame, such as a 4-hour chart or an hourly, I will certainly do that as well. And the link that Yana just posted, if you go there, guys, one of the services that you will receive as signing up for our community is the chart of the week, which is published by Greg Capra. And just this week, he actually wrote up an article on different currency pairs. It covers things like the dollar and the relationship of the dollar to oil, things of that nature. So you can, right there, just click that link and you'll be able to get taken right there. So, out. Sorry if I missed, and repeat the question. What are the moving averages and what type? Kara, the blue one is an 8 exponential period moving average, and the red is a 21 exponential moving average. Right, so 8, 21, both EMA. Hey, Pedro, how's it going? So let's see what else. Is there anything else you guys want to look at? I'm pretty sure I covered everything that you guys mentioned. If not, just type it in there again. Otherwise, we can see what's going on. There was that one, the pound Canadian dollar that I really liked. It's so much so that we've got a position on it here now. So we'll see how that one works out. But, again, right there, you can see it. It's live. So see how that one plays out. Euro yen. This one. See, this is the kind of stuff that you just stay away from. It's going up and down. There's no clear trend in place. You leave it alone. This is not where you can make a significant amount of money. Yep, here it is, Bo. Great minds think alike, I guess, right? I pulled it up right when you were asking. Do you use Elliott wave and or fibs? We do not use Elliott wave. Fibs we do look at, we do consider, but again, it's not paramount in the decision-making process. In other words, there are so many traders who do use fib retracements when it comes to Forex that it would be silly, almost foolish, for me not to consider them. But I use it in alignment with the patterns that I look for, right? Such as the pristine buy setup that I talked to you about earlier. That's how I use it. So I use it in alignment with objective information. In other words, if there's a fib retracement level that doesn't line up with anything that is objective as far as price, support, or resistance, then I disregard it. I don't put as much value on that reference point. I've done a little more analysis, Shahid, and over time, it's really whichever one you prefer. I have started to find though that going back and looking, this works a little more consistently. But at the end of the day, moving averages are not the reason that I enter or exit a trade. They are really nothing more than to help speed up the analysis process. My entries, my exits are based on the candles. Will this webinar be available if I didn't sign up? I'm not sure, to be honest with you, Dave, but if you email me, I can certainly make sure you get it. USD CAD triple top. Let's take a look at that quick. My time's starting to get low. Yeah, I mean, it is getting a little toppy here. However, you know, I mean, you look at this weekly chart and it is into resistance. So there is reason for the US dollar, Canadian dollar to start coming in here. But at this point, it's still in an uptrend. It's still bullish. There's no crossovers taking place. I would be reluctant to short it up here. You know what? I don't have to get the top of a move. I don't have to get the bottom of a move. I just want to be able to get the meat out of the move. I have been burned too much trying to pick tops and bottoms. So I don't do it. I don't do it. I'm just looking to get the meat out of the move. Right? We have support on Euro Yen. Let me pull up Euro Yen here. Support on Euro Yen at 138. Yeah, well, I mean, you know, there's definitely resistance up here. And if it ran up there again, you definitely could be looking to short that. Absolutely. I mean, again, you know, you look at a 4-hour chart, you can see even nicer setup here yet. Little breakout failure into resistance. This is another type of setup that we teach. You know, is this kind of breakout failure into resistance. So, you know, you might be looking at this and say, well, Kurt, this is in an uptrend. We're above the 8 and 21 period moving average. How can you now say that this is a long? Well, it's because when combined with multiple time frame analysis and seeing that it's into resistance, the odds of it continuing to move higher are low. So we have to know what the larger time frame looks like in order to properly position ourselves. And yes, you should be using the same moving averages on all time frames. Just trying to make sure I didn't miss anything here. How many different patterns do you teach? We have, you know, we've got the PBS, the PSS, 1, 2, 3 continuation. We've got breakouts, breakdowns, climactic setups. I mean, so we've got, you know, 10, 15 different patterns to cover you both long and short, so that you are always prepared for whatever the environment may throw at you. And again, you can trade it on all time frames. So, guys, it looks like my time here is up. So I want to, again, thank you for the time. Thank you to Trading Pub for having this event and having me be a part of it. So, you know, again, guys, you can click the link that Yana just put in there if you want to get access to our community and see some of the newsletters. If you want to get into the trading room, like I said, you know, no problem there. You can do it for free. You know, check it out. See what we're all about. If you want to trade Forex with me, you know, I'd love to have you be a part of it. Okay. So thanks again, guys. Have a great day and enjoy the rest of your week.